down about a quarter. Mid-cap index is barely up, unchanged actually, and I think the small-cap index will also give you a sense of where we are starting. So are we headed towards another quiet day? We'll see. The Nifty heat map gives you a quick sense of where things are landing at the word go. So banks are under pressure. HDFC, ICICI, Bajaj Finserv on one end. Asian Paints, SBI and Bharti are opening in the green. So it's almost evenly split between what's up and down on the Nifty. 60 points lower to begin this trading session. So let's talk about stocks.
Yeah, absolutely. And I think what Vivek just was talking about, maybe that's what's playing out on HDFC Bank and ICICI Bank straight away. This whole calculation, new regulatory requirements need the weightages of huge big boy stocks to be reduced if that index has a futures contract on it, which is the case of the Bank Nifty. So because of what Vivek just explained, there will be a weight reduction in the Bank Nifty on HDFC Bank and ICICI Bank in favor of stocks like Union Bank and Yes Bank. So I think that adjustment has started playing out. Both those stocks are down between 1 to 1.5%. Should also pull up HDFC Bank, biggest loser on the Nifty right now. What else? Tata Motors is slightly lower, 0.5% down. There is Adani Ports, which is lower. Bajaj Finserv, Jio Financial, also on the lower side. Eternal is slightly lower. That's the losers list. Now let's talk about the gainers. Asian Paints, top winner on the Nifty this morning, about 0.6% higher. There's some buying in Bharti Airtel. Max Healthcare and Maruti Suzuki managing to put on a little bit of weight as well. IT is actually trying to fight back. So there's some green on Infosys, on Wipro I can spot early in the morning. But it's very, very mixed right now. Thanks to the big banks, the bias is definitely negative. And the Bank Nifty itself is down 0.4%. Nigel?
You know, this particular announcement, though, it's expected.
Yeah.
And, that's where the street will align to it. So I don't think it's any kind of big negative or any kind of big rejig. And it'll happen over a period of time. That said, let's focus on a few stocks in the broader markets. MB Photovoltaic, well, that stock is up, close to around 5.5%. We just had the management with us. They're expecting to go with the current run rate, margins at around 33 to 35%. And the debt numbers come down to sub 100 crores, but they have a big capex plan going ahead. Stock is one of the big gainers, up close to around 5.5%. MB Photovoltaic, let's get that one up for you on the screen. Vodafone Idea, well, the street is taking the comments that came in from Mr. Scindia, taking note of it for sure. Stock is up close to around 3% as we speak. On the flip side, the large trade, a fresh supply with regard to Bajaj housing, that's definitely plaguing the stock. Stock is down close to around 9%. JM Financial as well had a very, very good run, but that's coming for some profit taking. Stock is down close to around 20% from the recent peak. And some kind of mild profit taking on stocks that did well towards the final hour of trade yesterday. Physics Wala as well as Lenskart, both of them have come in for some very, very mild profit taking in today's trading session. What else? One of the unusual winners is Forgings. Stock is up close to around 9%, more than 1 lakh shares that are traded. So that's higher than what we normally see. Volume's not very, very large. One of the big underperformers that spiked up in trade. TrueAlt Bio as well, another newly listed company that saw a sharp correction from the peak. Well, that as well is seeing a bit of a bounce up. Though out there, the only around 60,000 shares have got traded, higher than normal, but still not very, very high volumes. On the losing end, Thyrocare is down close to 5%, close to 1.2 lakh shares getting traded out there. And Hariom Pipes that bursted up yesterday, today it's come in for some profit taking. It's down close to around 3% or thereabouts. So net, as we did that market check, the Nifty has recovered from the day's low. The mid-cap index has moved to the high point of the day. And the Nifty Bank is cutting its losses as well.
Okay, I think, it's looking better than where we started the morning. About 0.14% lower. The Nifty Bank is down about 0.3% as well. Lots of individual movers we want to address in just a bit from now. And we'll do that. Trideep Bhattacharya is now with us, so let's go across to him as well. CIO Equities, Edelweiss AMC. Trideep, good to have you with us here. Thanks for joining us. Is the slightly unhinged move on the currency a bit of a factor for equity markets? Is it a bit of a dampening factor for equities? I mean, additional dampening factor. How do you think about that, Trideep?
So one positive, one negative from market standpoint right now. I think I'll start with the positive first. I think after close to year and a half, the last result season saw earnings upgrades come through, which I think was a welcome and much needed data point for that to happen. A lot of effort from the government as well as from the macro conditions. And that's the reason the market over the last month or so has seen some buoyancy. But on the other side, there is a bit of lingering nervousness around the India-US deal when that comes through, the shape and form of it. And in some way, there is a dawning sort of thought process as to, if it gets further delayed, what might happen. And I think a combination of these two is keeping markets, I would say, in balance. But I would still say the major point that we actually closely track on the earnings side is finally looking up than down, which we have seen over the last 12 to 15 months.
Hi, Trideep. Good to have you with us today. We were just having a conversation with Elara. We were having a very detailed discussion on how these platform companies need to be valued, the consumption plays. Because that's the new era of consumption, right? We've moved beyond staples, really. How are you looking at them? And there are so many. There's food delivery, consumer tech, etc. I mean, house help companies, all kinds of platform companies now in the listed universe. How do you find valuations and what's your view?
In general, expensive, and hence our approach is selective. So two important parts to the framework that we look to evaluate. One is, if not making money right now, how far they are from being profitable, and is there a path to profitability in the thinking of the management in the way they are going about it. Secondly, given that these platform companies are kind of online, the onset of competition could be fairly sudden and fairly kind of variable over multiple months. So because the moat sometimes can very easily be a certain kind of, one is distribution, but about the discounts and things like that. So while about 6 months ago, we find that the competition was going down because one of the unlisted players did not get funding or was not able to manage funding, that has actually come back, which means incrementally higher competition from where we are, from where we were about 6 months ago. So we watch path to profitability, the competition dynamics in there, and ultimately the unit economics over a period of time. Those three guiding principles. But directionally, we have been a little more careful of late, given that competition has been increasing. And what that means is path to profitability is probably a little more further out than what...
Trideep, can I just, I started with the rupee with you, and look at what's happening to the currency once again. It's going fast. Some of these things are quite amazing because just think about it. Just 28th of last month it was, right? I mean, we were at 80, we were at about 88.50, 88.60. That Friday, I think it was the 20th of November, we blew past those levels very, very fast. 88.80 was that stop. We blew past that, got to about 89.20. And in 5 days flat, from 89.20, which was seen to be at that point the new line in the sand, we've gone to now 89.83. I think we got to 89.85 now. And it's come up a little bit from that level. Just a couple of seconds back, I think 89.85 is the new all-time low on the rupee against the USD. So, yeah, I mean, I think the fundamental factors are all there, very clear. But I think what's exasperating the move perhaps at the margin is, of course, that the RBI is absent and not sort of providing a little bit of smoothing of this volatility that we're seeing, the smoothing intervention, if I can call it that, if I can use that word. Anindya Banerjee is with us of Kotak Securities with a quick live take on what he's seeing on his screen. Anindya, of course, has tracked and traded currencies for a long time. Anindya, good to have you with us here. Just a quick word on what you're seeing.
A very good morning, and thank you for having me. Actually, as the USD inches towards the 90 mark, which is psychologically very important, I think what is happening, the market is waiting for a heavy intervention from the RBI. Yesterday, we had seen a bit of intervention, but today, as of now, we have not yet seen major intervention. If now the USD basically moves above the 90 mark, what can happen is a lot of these option strikes could get triggered, be it in the offshore or on the onshore, and that can accentuate the move.
Yeah, and Anindya, morning. I mean, what's also really telling is that this move on the currency in the last 2-3 days, it's not happened like there's a major spike on the dollar globally. We've not even had like a huge basket of FPI outflows. in the last 2-3 sessions, very normal. So despite, these factors, nothing major on the dollar, not a major, FPI selling spree in the last 2 days, we've come to these levels. So what's the sense? I mean, is the market reading or sensing that the RBI has made maybe its peace with the 90 level? Because the Reserve Bank has always said they're not here to defend any specific level. They're only here to ensure the market behaves in an orderly fashion.
Right. Actually, what has happened over the past couple of days is there has been a large NDF expiry. Either those positions are rolled over, means short positions, or they have to be covered. So because of that, we have seen an upward pressure. As you rightly said, the RBI is intervening, but not that aggressively. And what it generally creates is an environment where speculators enter the market to make some quick gains. And then they start to buy dollars, especially in the offshore, and that pushes the prices higher. Then it triggers the stop losses, the importers join, and it creates a kind of a trend. So that's why we are watching the 90 mark very importantly, because if that breaks, stop losses can get hit further, and it can accentuate towards the level of 91.
It was looking... Yeah, it was looking a little 89.85 we got to, which is a new low, and it's been pushed back by about 10 paise as we speak. I mean, I think that we should put the live rate up as well. 89.76, so 75. So, quick. We don't know, and we'll. This 10 paise move, Anandya. I mean, hard to tell immediately, right? What's causing it, but
generally, what we have seen from the RBI intervention in the past, when they intervene aggressively, it doesn't fall 10 paisa; it falls heavily.
Yeah, heavily. Okay.
Sometimes the RBI also tests waters by selling little.
Little
bit. That 90 mark we have to watch.
Okay,
Anandya,
Jayesh,
when do you expect?
Just let's get him Jayesh Mehta as well. He's Vice Chairman and CEO of DSP Finance. Jayesh bhai, good to have you with us here. Good morning. Your perspective on what we are seeing here now, and how would you read it, and way ahead?
So I think, while all the macros have been good, last couple of months has been solid import, both gold and from China. So that has been a great import. And more importantly, whatever the macros are, like if we have daily selling of FPI, right, that cannot be sustained unless the RBI comes and sells. And that's what RBI has been doing since last 2 years, right? But I think the pace in last few days or 10 days or so, they have been leaving some gap and let it go, right? So maybe we don't know whether it is deliberate, whether it is because as the trade thing with US, which is still lingering on, it's not moved yet. And also, it also helps a little bit depreciation with China and stuff like that. But more importantly, I think it is the FPI continuous selling without RBI support. When I think there's some NDF which matured, I think that also they didn't roll over. So it doesn't look like anything happening for the heck of happening, but I think it may be letting it go. Because if they want to intervene, they can really intervene in multiple ways. So they are not really bothered doing that at this juncture.
Hi, good morning, gentlemen. Mr. Mehta, I wanted to ask you, what's your view then with regard to the RBI action? The real GDP growth was a little bit better than expected. Nominal is still lagging. And you have this rupee weakness as well. What's the action you're expecting from the RBI in the upcoming meet? We were factoring in a rate cut. Do you think that gets pushed back a little bit, or do you think they go the course and they cut rates?
No, there are a lot of economists, a lot of traders have been saying that it needs to be pushed back and stuff like that. But I think they need to do it because, the inflation being so low, at the end of the day, the mandate for them is to manage inflation, right? When it is above the 6% mark, people do bother about it. And when it is below 2% mark, they need to be bothered about it. So they will have to do this rate cut and most probably very high chances of it unless they may have something else in mind. But more than rate cut, what will really help the market and the bond yields particularly is the OMO purchase. They need to do at least 2 lakh crore till March. And that money infusion is definitely required because of intervention done in the FX.
Sure. Anindya, just to come back to the current technical factors at play, I was looking at the numbers as well. I mean, FPI selling in November actually was very sanguine, just about $400 million of selling. Yesterday, we had about $300 million of selling coming through. Your point on the NDF rollover, At what point do you think the shorts will want to maybe cover or at least book profit? I mean, are there any levels in mind? At what point the shorts decide to have a bit of a rethink?
We have seen when it changes the handle. So let's say from 7 to 8 or 8 to 9, those macroeconomic-wise, it has no bearing. But it tends to have a big impact for traders who have positions because there the stop losses are above 90. Somebody may have at 90, 10, 90, 20. And a lot of traders watch for a close. If you get a close above 90, you get a confirmation, and then the speculators join in, and then it becomes a self-fulfilling prophecy.
Yeah, that's on the weak side. Anindya, I was talking about the reverse. I mean, like, if the RBI steps in a heavy way, then obviously the rupee shorts need to start covering. So when does the reverse start? At 90, all the speculators are in the market, and then it just becomes a self-fulfilling prophecy. What about the other end of the trade?
Exactly. So if you see a month back, RBI had intervened very aggressively once, and we had seen a sharp drop, almost like 1 to 1 rupee 20 paisa on just 2 trading sessions. But the point is, yes, below 89, 88, 80, we could see a lot of the stops getting hit. But that could be just a flash in the pan because if the selling stops from the RBI, the stops are hit, then from the next day onwards, again, you will see an uptrend. It will not change things structurally, but it will give you a temporary relief. So below 88, 80, a lot of the stops are there of the people who are long on the dollar and short on the rupee.
It was exactly the opposite, right? People were thinking, this is on the 28th, when people were comfortably short dollar, thinking, this trade deal perhaps is around the corner and you'll easily make some money. But that did not happen. That did not come to pass. And I think that soured a little bit of sentiment on that day when, of course, there was no intervention. There was no supply from the RBI as well. But Jayeshbhai, just to wrap up this conversation, we've got a current account deficit, right? Most, I think, other Asian emerging markets are running a bit of a surplus. Not as a comparison, but just it's all relative. Capital flows, look at FDI, look at FPIs, which Anindya also referred to. That has also slowed down quite a bit. So, I mean, the currency is adjusting to the new fundamentals, right? It'll happen in an orderly way or a disruptive way, I guess that is the question. So, beyond a point to fight the currency's adjustment to these realities, perhaps is futile, and that's the view that the RBI is taking, Jayeshbhai?
I think so. So it's like, there was this trade thing getting through, and there was a lot of rupee long dollar short position in the market. And, at some point of time, you cannot continuously keep on spending our reserves, right? And the selling was non-stop. And, of course, we did have last 2 months, we had good imports, both gold and from China. So I think that also did impact a little bit more. And I think if post the trade thing, if the sentiment does not change, if FPI continues selling, I think people will, I think some of them have already stopped their rupee long. People will actually go to other way around, which is dollar long positioning can happen if the things continue to be selling off in equities.
Yeah, absolutely. We'll continue and pick up on some of this a little later in the day. Thank you very much, Jayeshbhai, for joining us. Anindya, it's always great to have you with us on the program. So another new low, 89.85 is the new low for the rupee against the dollar. And of course now, it's been pushed back a little bit by about 10 paisa or so. Let's come back to equities. And I think, big cement in focus. Nigel.
Well, that's right. Shree Cement, that's the next management on the show. Reports suggest that cement industry has been facing some headwinds, both on pricing as well as demand. To understand the trends, what's the way ahead? We're joined by one and only Mr. H.M. Bangur, the chairman of Shree Cement. Hi, Mr. Bangur. Always a pleasure, sir, to have you on the show. Well, just highlighting the 3 broad points that we're going to be looking at in this interview. The cement industry trends. What's the outlook for Mr. Bangur for FY26 and FY27? And what about his capacity addition plans? Well, Mr. Bangur, let's get to the first point. Throw some light on the current demand scenario, given that Bihar elections are over, along with the exit of the monsoon. The first half of the year on volumes has been flat for you. Where do you end this year? 36, 37 million tons that you had spoken about earlier. Do you think you get to that mark?
Yes, we still maintain 36 million ton plus, and we maintain that mark. Earlier, we were always talking about price versus volume. Now we have to talk and we have crossed that barrier. In last 10 days, after Bihar elections, all the festivities of Chhath Puja and everything over, from last 5 days, we are seeing a good jump in demand. We are also getting it. And now we will be talking of both price and volume, not one at the cost of other. Whatever pain had to be taken in volumes had been taken, and we still maintain the yearly projection as 36 million ton plus. That is the first question. The second was about the capacity addition. We had indicated that by 29, 80 million ton will be our capacity. We still maintain the same. And by this year end, it will be around 68, 69 million ton.
All right. 80 million tons, sir, by when?
29.
By 29. I think some on the street were expecting it to be 2028, but 28, 29, I think that's the guidance you're giving us.
That was pushing us too hard. We never said 28. We always maintained 29. The street may be thinking anything.
You know, Mr. Bangur, over the years, you've been such a good performer. Some expect Mr. Bangur to always outperform. Maybe that's where the pressure comes from.
Well, that's why it will.
What about, so all of this will be organic, or will there be some inorganic? I've heard of late that, the team of Shree Cement has been visiting some plants. You could correct me on that. Some of those plants are in the market. I don't know whether are you looking at Deccan Cement?
No, we are not looking at anything. All the growth will be organic only.
All right. So you're just, looking at some of these units in terms of to get some data points, etc. But you're not an aggressive buyer inorganically. No. Is that correct?
We are not buyer. We are not trying to get to data point. Sometime, if there is a very good mines or something good,
yes,
we are looking at it.
Yeah.
Not to gather data point, but in case something unexpected is there in the unit, one or two units we have gone, but not really seriously. We are not chasing anyone.
Okay, thanks for clarifying on that. As the street but is a little cautious. They're saying that Mr. Bangur is losing his dominance in northern region. Motilal Oswal, for example, they have put out a note. They're saying that in the northern region, your share has declined, to ballpark around 22% from around 24%, say around 5-6 years ago. And they're saying in the next 3 years, because the competition is getting aggressive, your, market share will come down to around 19%. What do you have to say about that? You're okay?
Yes, as we will be not adding much capacity in the north, we have become an all-India player. 19% or so, between 19% plus minus 0.5%, that should be our capacity in the north, maybe in 3 to 4 years' time. And the cement demand is increasing at such a pace, you can't keep pace up with the capacity. So we are agreeable to 19 to 20%.
Okay, all right. So you're not too worried on that front. Let's tie this in, sir, then, because you're saying now you will focus both on value as well as on volumes. And 36 million tons is what you're looking at. But there was a recent...
Let me say, that is only the north volume. When we see the all-India volume, our market share in India is increasing. As we have increased our volumes in south, east, west. So our North India volume, only one side is to be seen. Okay. It will come down a little, but our all India volumes will increase. This has also to be highlighted equally well.
All right. So the market share, I think all India market share is around 9%?
Yes, it will remain so.
All right. You want to be it's not only about the north. On an India perspective, pan-India, you'll be hold at around 9%. Got it.
Right.
Given that the volume push is there, you're seeing demand is improving a little bit and pricing as well hopefully improves. And we have some recent announcement. Freight cost, I think there was some reduction that was announced by the Indian Railways. What does this mean in terms of an EBITDA per ton for the second half of the year? On an average ballpark, what should it look like?
Our ballpark, the EBITDA per ton should be maintaining what was there in the first half. It will be almost same with increased volume in the second half. So the overall profits will increase sharply.
So it will be approximately 1,250 to 1,300 rupees. Should that be fair?
1,100 to 1,200 should be what I will be comfortable with.
Okay, all right. And what about pricing, sir? The GST rationalization came about. All the benefit was passed through. How has pricing changed?
All the benefits have been passed through, and the industry had been little overcautious. They have passed through little more than what the GST has given. So now it will be increasing to cover up whatever been additional losses are there because of the GST reduction. There was some turmoil and nobody could hold to the right level. If levels have gone up a little more than what they should have gone.
All right, Mr. Bangur, you know, when CNBC TV18 was celebrating its first anniversary or first birthday, Vicat at that point of time had offered to buy Shree Cement, I think, for around 1,350 crores. You went ahead and you said no. Now, 25 years later, the company is sitting at a market capitalization of more than 95,000 crores. You're sitting with some cash in your books as well. What is your vision for Shree Cement from here on? You took a splendid move 25 years ago. From here on, where is it headed? What's the next leg of growth coming from?
We are increasing a little in the dividend. We will be maintaining our cash pile only at the same level. We will not increase our cash pile. So if no ideas come, the shareholders will get the cash money. Otherwise, they will get the assets. And 80 million ton in 3 years also will require a lot of cash. So our cash flow is practically tied with 80 million ton. And there will not be any surprises and no inorganic growth is there. So our balance sheet for next 3 years, cash flow, everything can be projected.
Right, sir. Cash flows projected. You're close to 1 lakh crore in terms of market capitalization. And what a splendid move it was, you know, in early 2000 when you said no to selling out at 1,300 crores of market capitalization. But some investors are saying, you know, in the last few years, the returns haven't been as great. What do you have to say about that? Can you give them a little bit of a sweetener? Because you want to do things organically. Cash flows are steady. The entire trajectory has been laid out. Maybe give them a one-time dividend. You're sitting on $1 billion of cash, or maybe a buyback. What do you say about that?
No, buyback at these values for company will not be good. Company requires continuously cash for further growth. So buyback will be, we are the biggest shareholders. So the shareholders, the outside shareholders will not get much if I buy back. So dividend and further growth is the thing. As far as our future growth plan, it will be in the cement, power, cement-related business to reduce the cost of cement, cost of production. A lot of things will be there.
All right.
Secondly, when you are saying that the returns have not been good in the last 3-4 years, I totally agree. But that is the fate of all cement industry. In the last 4 years, total EBITDA growth of cement industry is close to zero. Industry as a whole, C or A or B hardly matters. The industry is not growing. Over emphasis on price control is there. The cement industry profit growth is not there, though investments are coming.
But do you think, sir, the time has come now? We have been kicking the can down the road for the last 3 to 4 years. Is it time for the cement industry to finally bounce back? Demand will likely to show up. Cost at least have been rationalized, and a lot of producers like you have focused on the cost side. So better times ahead?
I feel so, sir, because only the expectation is that in 2 to 3 years' time, 3 to 4 years' time, one good moment comes and then the same profits are maintained. Now the profits are in the range for the industry at 900, 800 to 1,000 rupees for quite some time. It has to change. Otherwise, no new investment can become viable.
All right. And the return ratios as well come down to very, very low levels that it may not make sense then to add capacity. Well, Mr. Bangur, a pleasure speaking to you as always. It's been a while since we chatted. Looking forward to meeting you in person as well, sir, in the coming weeks.
Thank you.
Well, on that note, though, we'll slip into a short break. On the other side, we'll get you a conversation with the management of Vicat as the US FDA has accepted the NDA for Zenith.
Welcome back. So, as far as the market is concerned, things haven't really moved much. We are practically where we were at the start. Slight drift down. That's what the equity market is doing, 80 to 90 points lower. Let's focus on that big block trade that happened. Bajaj Housing Finance stock's been down 6-7% ever since. Back to Vivek on this. Vivek, you were telling us this, in all likelihood, this is the promoter selling some stake to meet regulatory requirements, right?
Well, that's right. And, that is going to be the concern going forward as well. I just checked the data as far as, at the end of Q2, how much did Bajaj Finance actually hold? A little over 88%. So even after today's stake sale, which we understand that they paid around 2% equity, they're still left with quite a lot of selling to do in order to go ahead and meet the minimum public shareholding norms. It'll be interesting to see whether they continue to go via the block deal route or whether they go via some other route in order to go ahead and ensure that their shareholding meets the MPS norms by the end of the required period. The SEBI rules have now been tweaked, so that gives them some amount of relaxation in order for the timelines to be met. In talking about today's deal itself, little over $170 million worth of equity changed hands, almost 9.6% discount to yesterday's close, which is why you're seeing the kind of downtick on the stock today. And like you mentioned, it is the promoter, Bajaj Finance, that actually exited the stake.
Okay, all right, got that. So we'll keep this stock on the radar, 8% lower and still at those levels. Thanks for that, Vivek. Let's see what else is shifting in the market. The mid-cap market actually is doing better. Mid-cap index is flashing some green, even as the large-cap indices are struggling. In terms of stocks, interesting movers on the upside, Wockhardt, and we'll talk about Wockhardt right now because there's a new drug application that they filed in the US for their drug Zynic. That's pretty big. The last time we spoke with Mr. Khurakiwala, he was telling us that this drug could be as big as $500 million for Wockhardt. And now that they've moved on to the next steps in terms of regulatory approvals in the US, the market is taking heart from it. We'll get to that in just a bit. So that's one big mover. Some of the tier 2 banks are looking better. Union Bank is up to 2.5%. Now, this is also because of the index adjustments that are going to be underway. Remember, Bank Nifty will see a weight reduction in the big boys, ICICI Bank and HDFC Bank. And these stocks will be included in the Bank Nifty, Union and Yes, and both of them are holding up. But for the time being, let's go back to that big story on Wockhardt. The stock is still up 6-7%. The company has announced that the US FDA has formally accepted the new drug application for its antibiotic Zynic. The drug has been used in both India and the US on a compassionate basis on critically ill patients. Our colleague Ekta caught up with Mr. Khurakiwala, founder and chairman of Wockhardt, and began by asking him about the drug approval and the company's plans ahead.
This is for the first time for us and for India. A new drug application has been accepted by US FDA. And they normally would clear this drug in 6 to 8 months. So sometime middle of next year, we accept its approval in USA. And I think we need another 4 or 5 months after that to really introduce and launch the product in US.
Okay. What I mean to ask is that what are the number of steps that we expect till mid of next year? For example, are there fresh clinical trials that the company would have to undertake for the US in terms of fresh data?
No, I think the file is complete. Okay. The very fact that they've accepted the file means it is complete in all respect. So it is only evaluation by US FDA of our clinical trial and other scientific information. And they are visiting us to check up on the scientific information and visiting some of the sites where we have manufactured this product in Europe, which is already a US FDA sites.
Okay. So you're likely to hear back from the US FDA possibly by mid of next year and probably get the approval by then as well.
Yeah, we will expect to have an approval by mid next year, but we are in continuous dialogue even now. And you would be surprised to know, and we were surprised, during the lockdown, they were in discussion with us because this is a very priority drug for FDA, and that's why it is a fast track giving. Only in anti-infective, this fast track option is available.
Okay. All right. So when you say it's on fast track, that means that when it's a priority review, what are the steps that the US FDA is taking in order to expedite it?
I think they are committed to timeline. in terms of after acceptance of the file and approval. And generally it is 6 months. So in normal drug, it takes about a year or so for US FDA to approve a drug. So that is what it means by the fast track. Okay, they will internally put it in a fast track so that they complete the review in a shorter period of time.
Okay. Does the fact that the drug has already been used on compassionate basis, and I think the last figure that you gave us was at over 50 patients in India and the US, does that increase the chances of an approval because it's already been used in the US on a compassionate basis?
Yeah, as of today, it's the more than 70 patients on compassionate basis who have been cured and saved their lives. I think it is important for them, and it is an important information for them. But the fundamental basis of approval is what we have done officially in terms of clinical work and preclinical work.
Okay. If in case you do receive approval, say by the middle of next year or the end of next year, you would then have a patented drug that you're selling in the US. That's how we would read it.
That is absolutely true, and our patent is there for up to 37, actually, in US.
Okay.
For at least 10 years.
Okay. So as of now, you've not received approval in any country for Xenic. You've applied in India and the US.
Yeah, that was our strategy. We wanted to apply to US first, because once you get a US FDA approval, the approval in the rest of the world comes very fast.
Okay. What is the status in India?
We have applied 6 months back, more than 6 months back actually. Sometime in March we had applied. But I do not know how our internal system works, but they've not even opened our file yet. So we are following it up with the authorities to expedite because it is a life-saving drug. And the earlier we have in the product in the market, it would be better. In India's case, we have this more than 70, nearly 70 patients on compassionate use in India. We have also done another meropenem resistant trial where we had nearly 95% plus success rate. So all this, and we have saved so many lives, and there is so much pressure from medical fraternity for our drug and saving lives. And unfortunately, we have no further quantity available for even for patient compassionate use. And we are working on it to hopefully make it available sometime in a month or two.
Okay, so you've had a conversation with the Indian authorities with regards to a possible, possibly increase the rate of approval in India?
Yeah, we certainly discussed with them, but we still not heard from them, and we hope they will. And we expect India approval to, hopefully we were planning to get it much before FDA approval, but let us see when now it comes.
But I just wanted to understand, when you say that you've used the drug on a compassionate basis in over 70 patients now, that's what you mentioned. How many were in India? How many were in the US?
There were 3 US patients. The rest were from India.
Okay. And what's been the outcome of those patients?
Every patient where it was not given in the last stage recovered. So it was more than 95% usage. In some cases, it was used for 1 month, 2 months, up to 6 months also in some cases. So this drug has proved a remarkable efficacy and safety. Okay. Because one of the important things in antibiotic is normally not given for a week or 2. It was given longer time because the patient came at a very last stage.
Okay. Just wanted to understand, what is the market size that you're working with? Because analysts are working with around a $1.5 billion estimate in terms of the global market size for Xenic.
Actual market potential is about much more than that, but we expect that our drug should do about $1 billion or $2 billion of usage worldwide.
You're saying global sales should, the peak sales should be between $1 to $2 billion?
That is right.
Okay. When you talk about global sales, which countries are you including, and how much are you expecting from the US in particular?
US generally contributes 40% of the global market.
Okay.
So the Western market will contribute about 75% plus of the global revenue. and the balance will come from the other countries.
Okay, and India, you had mentioned your peak sales earlier in earlier interviews at around 150 crores. Are you changing that figure?
Oh, we are, yeah, I think that will happen much faster because of the kind of response and incidents we see here. And we should be doing much more than that 150 figure.
Okay. Out licensing, you've spoken about it multiple times. Now you have, one more feather in your cap to probably extend to those companies. Are you in talk?
It depends on the valuation we get in out licensing. And if we get right valuation, we will go ahead with that option. Alternatively, we are ready to market our own product because we have a series of products. So if we establish an organization now, I think we have products coming up in next few years, so that same organization would work, and it will be long-term beneficial for us also if we do it ourselves.
Okay, all right. Well, that's the walkout conversation. Stocks up about 5.75%. Markets, by the way, sold off quite heavily. And I think 100 points lower at the day's low. It's picked up a little bit, 26,086 at this stage. We're down about 88 points on the index. So there is that pressure. The Nifty Bank is doing much better. It did not, first of all, sell off like the Nifty did, as much as the Nifty did. And it's already started trying to come back up, down about 0.25%. So it's actually higher than where it was at 9.15, as opposed to the Nifty, which of course is lower. So that's the overall picture. Maybe just a quick look at the advanced decline, which is, clearly on the negative side, almost 2:1, 2 down for every 1 up. So it's not a great-looking screen. Mid-cap index is flat on the bottom of the screen, and I think the small-cap index is also down about 0.25% or so. Yeah, I mean, the small-cap index is down more. Mid-caps are flat. We'll talk about more stocks from the broader space in just a bit from now. But the interview with Telecom Minister Jyotiraditya Scindia that my colleague Parishad conducted, Minister Scindia said that the government is awaiting a formal request from Vodafone Idea seeking AGR relief. When asked about Bharti Airtel, he clarified that any other company seeking AGR relief must approach the Supreme Court. Listen into some of those comments.
Ask you about the big development that has come from the Supreme Court, with the court saying that the government can go ahead and reassess all of the AGR dues of Vodafone Idea. Having said that, what next is the government planning to do? What are the options?
So, post that judgment, which is what is being examined within the department today, we are also waiting the formal request from Vodafone. Once that does come through and we complete our evaluation internally, we will then put forward our recommendation of what can be done and what cannot be done.
Bharti Airtel has also requested the government for reassessment of all AGR dues. Are you considering the same?
Well, no official request has come to me as of now. In the event that they would pursue that, again, that is something that the court of the land will have to decide.
When it comes to waiving off or reducing the AGR dues for Vodafone Idea, would this be specific to one company, or whatever kind of resolution that you come forward with, relief package that you come up with, it will be for everyone?
The Supreme Court judgment is qua Vodafone India. So whatever we come up with has to be qua Vodafone India. We cannot cross the border of the Supreme Court judgment.
So you feel that the question of parity for the whole industry doesn't arise here?
As I mentioned, the Supreme Court has made a verdict on Vodafone India, and that's what is on our table today.
So very simply put, any company which wants similar relief, they will have to approach the Supreme Court.
Absolutely.
Okay, so that is the big interview, and we'll keep playing snippets through the course of the day, and the focus remains on Vodafone Idea. For the time being, let's bring Chandan Taparia into the conversation, figure out some trades at 10 a.m. Chandan, good morning. What's the view? Nifty, Bank Nifty, and any individual stock trades?
Good morning. Thanks for having me. So we have seen a corrective move in the market. However, on the last trading session, index made a all-time high at 26,325. But some profit booking is visible because of the weakness in the INR. So I think some sort of consolidation could be there in the market as selective heavyweights counter are witnessing profit booking decline. So I believe that Nifty may find support near 25,800 before it start the next leg of rally. While on the upside, 26,250 and 26,325 could be the key hurdle. So looking for some range-bound bias and support at 25,800. Talking about Bank Nifty, 59,000 is major support, 60,000 is the hurdle. We need to play with the same. And positive view on the PSU Bank and upcoming RBI policy will be a key trigger. Stock specific, positive on the Bank of Baroda. The stock has been making higher tops, higher bottom on the daily chart, given a consolidation breakout on the weekly scale. So one can buy with support of 295, looking for an upside target towards 315. And one more trading idea on the buy side is Motherson Samvardhan. Strong breakout, pollen flag, high tops, high bottom. Rising trend line is supporting well with positive rollover data. So one can buy with support of 140 for an upside target towards 125.
Okay, all right. Thanks very much for that. Markets down 100 points once again. So that 20-25 point recovery has been given back, and 26,070 is where we are at. I think 25,800 or so is the 20-day, so there's still some distance away on the index. We'll take a break. Manisha on the other side. Commodities in focus when we return.
Welcome back. As promised, let's focus on the commodity market action of the day. Manisha was telling us some profit taking is coming through in the precious metal space. Let's see what she's tracking now. Manisha.
Well, yes, the precious metals have seen a bit of a decline, but not base metal prices. And this year, clearly, when you look at the metals, the ferrous metals have continued to see a decline. Steel, for example, is trading near 5-year lows, but it really is about the non-ferrous metals, which have continued to do quite well. So take a look at the copper prices, and 11,200 plus kind of levels is what we've seen on LME, which is a record. And when you look at the US copper prices, that one is trading at a 4-month highs as well. Well, there is support because of one, tight supplies, you have elevated premiums, and then the US dollar index also also has weakened to around 2.5-week lows. That has been supportive. There is also uncertainty over potential future tariffs coming in from US. There also is 88% probability right now that the US Fed will cut interest rates in the meeting in December on 10th and 11th. That clearly has been one of the major supporting factors for many of those asset classes. It really is about Chinese smelters because they are planning cuts to combat overcapacity issues. Now, this is one factor that has led to a lot of support come in for copper prices in the last couple of months. By the way, since the month of August, we've seen prices gain up by 13% as the rhetoric continues from China there. Well, the major copper smelters are expected to reduce production by 10% in 2026 is what has been supportive. China has halted approximately 2 million tons of planned smelting capacity for next year is what the markets are reading into right now. When you look at the Chinese smelters, well, they account for nearly 50% of global smelter output. So the decision coming in from China is what is important and has been supporting prices. Apart from that, it also has to do with the International Copper Study Group. It says that currently the 2024 global capacity was at 26 million tons, which is expected to go to 30 million tons in sense of smelting by 2028. That's an estimated number there. And if these numbers do continue to be on the stronger side, even then the demand is much higher and that would be supportive. It's not just about China. When you look at the rest of the world, there are mining concerns there as well. The incident at Indonesia's Grasberg mine, it is expected to resume completely only by 2027 first half. So that is a supportive factor. It also is about recurring protests in Chile and Peru. There are output concerns also coming in from Dominican Republic and Democratic Republic of Congo, major producers again. And then lower output guidance from Anglo-American for 2026. The support also comes in after BHP is estimated that the demand for copper by 2050 would be up by 70%, and there wouldn't be that kind of copper availability into the markets. So going forward then, for 2026, the expectation in sense of copper are slightly on the higher side. We already have seen 11,200, and you have Bank of America talking about 11,300 of an average price in next year. Cities talked about an all-time high of 12,000. Goldman Sachs talks about an average of between 10,000 to 11,000 there. And JP Morgan talks about various scenarios where they expect the prices to trade within 9,500 to 12,000 therein. And then Deutsche Bank also has come out with a report this week itself where they are talking about $11,000 a ton. So interestingly, while not too high highs is what we are looking at, but the prices are expected to trade around these levels for next year as well.
Okay, all right, Manisha, thanks very much for that. Some forecasts coming in there for copper. We'll take a quick commercial break here. It's the economy. Lata in conversation with Suyash Chaudhary of Bandhan AMC and Dheeraj Lim of ANZ Bank on the outlook for bonds and the rupee ahead of the RBI policy. Stay tuned.
The Indian rupee is one of the worst performing currencies in 2025, down nearly 4.5%, while most other Asian EM currencies have actually strengthened versus the dollar. Today we saw a sharp fall in the rupee, but it has lost 1 rupee 30 paise or 1.5% actually since November 18th, when the all-time high October trade deficit was announced by the government. Separately, bond yields have been rising since last Friday, November 28, when the Q2 GDP data was announced. The data has convinced many in the market that a rate cut is not a certainty on December 5th from Reserve Bank. To discuss the bond and rupee market outlook, I have with me Dheeraj Nim of ANZ Research and Suyash Chaudhary, the head of fixed income at Bandhan AMC. Gentlemen, good morning. Thank you very much indeed for your time. Let me start with you, Dheeraj. What is the sense? I mean, from November 18th, of course, the rupee has been depreciating all year, but it has been a fairly sharp depreciation from November 18th. Now is like 90 round the corner. That's the chatter, at least.
Thank you for having me on the show, Lata. I do think 90 is very much on the cards for the rupee. Look, I think the biggest factor is us not having a trade deal, at least by the expected timeline. Now, there's a whole lot of uncertainty as to when the trade deal would happen, which means that not only a future economic growth is at risk, of course, we are also experiencing a widening of the current account deficit. Capital flows remain deficient. So all of that point to an adjustment in the currency, which is also warranted from an economic perspective. I therefore do think until we have a trade deal and we know its fine print is actually favorable for India, the rupee should continue to weaken at a moderate pace.
You know, normally for the fundamentals of the rupee versus the dollar and other currencies, we look at the 40-country REER, the real effective exchange rate. The last one published by the RBI in the November bulletin actually showed the rupee undervalued. It was at 98 or 97. So doesn't that count for something? I mean, it's fallen enough. All this bad news of no trade deal, capital outflows, current account deficit is all in the price, isn't it?
Well, I'm happy to see the real effective exchange rate actually below 100. I personally do think that for India's exports and manufacturing to do well, we should pursue a competitive exchange rate, if not a significantly undervalued exchange rate. But we also have to keep in mind that the real effective exchange rate has spot element and also the CPI differential element, the inflation differential element. Of course, India's current CPI inflation is exceptionally low, and we expect it to turn around, starting Q2 2026. And therefore, that tailwind to the real effective exchange rate would suddenly vanish, which means that if you want to keep the rupee on a competitive footing, you would have to ensure that there is sufficient spot depreciation in the currency.
Oh, okay. Okay, so by the second quarter, you are expecting even more depreciation. Okay, let me veer my attention to the bond market. Suyash, the Q2 GDP number appears to have been bad news for bonds. We've actually seen yields rise. How are you reading it and its impact on what we should hear on December 5th?
I would not overread that, Lata. There are certain distortions in play that economists and the market well recognize, including the very, very low deflator. Also, if you see RBI's commentary on growth is forward-looking, their concern largely pertains to the second half of the financial year. And therefore, that concern may not have gone away, although the first half gives a good base upon which that concern rests. As far as the policy day is concerned, look, the marginal utility of the next rate cut is rapidly diminishing. After 100 basis points, whether or not to go for the last 25 basis is basically a judgment call. We think since the governor and the MPC have guided so clearly, they will go ahead with that rate cut. What the bond market will also look for is commentary that does not transmit volatility or uncertainty to the market. So October policy did a very good job of commentary that gave reassurance to the market that a benign rate cycle is in play and will remain in play for some time. And that will be equally important as much as the rate cut would be. And third is, with RBI stepping up rupee defense, core system liquidity on a projected basis will diminish, especially so because over Jan to March, you will have rise in currency in circulation as well. And bear in mind, this is busy season on credit, so credit to deposit ratio is also rising. So third element will be the guidance on liquidity. and the extent of proactiveness that RBI shows in shoring up core liquidity, the bond market does expect somewhere around 2 lakh crores of OMO purchases from RBI over the next 3 months, which I think is a fair expectation to have. So all told, we are probably in a range as far as the bond market is concerned. The direction of travel on some variables like current account deficit, etc., have worsened a bit, but the levels there are still such that the bond market needn't sell off much more from where we are.
Okay. In case both of what you say happens, the Reserve Bank does cut and guides that it will remain benign. They can't say they will support growth, but I guess they can think of something benign. And they give this 2 trillion OMO announcement later in the day. I don't think that will come as part of the statement. But if they were to do that, what is the range for the 10-year?
Look, so first of all, it may not even come later. That day, it may come over a course of time. However, what the bond market will seek is assurance that such a tool is very much up and center in the toolkit. As far as the 10-year is concerned, look, 10 basis point plus minus from where we are. The curve has also bear flattened a bit over the last few days, which is to say that shorter end yields have risen somewhat, expecting some bit of confusion with respect to whether the rate cut would happen or not. We expect that would sort itself out. One underlying issue that remains in the bond market is lack of risk appetite, and therefore, combined with the kind of duration supply that the market has, we would expect the yield curves to remain reasonably steep. And we think really the plays in the bond market are, 5 to 7, 5 to 8 year segments more than anything else, which are a pure play on the rate cut and OMOs.
Okay. Dheeraj, how much will this prey on the bond market, on the currency market? The fact that there is going to be more liquidity, that also is usually rupee negative, and the fact of the rate cut. Will that add to depreciation on the 5th of December and thereafter?
Well, I think so. I think that the rate cut is not fully in the price, so to speak, from an FX perspective. So if the RBI goes ahead and delivers a rate cut, which I think it must for the sake of the economy, I think some pressure on the rupee can be experienced. And like Suyar said, I also expect, some amount of liquidity support to come through from the central bank to support the bond markets, if not in this particular statement, then perhaps later. And all of that should weigh to some extent on the rupee. But that's part of the broader adjustment I believe the rupee should be exhibiting in the current scenario. When you're thinking of future growth, which could be sub-potential on account of tariffs, which look like here to stay at least for a while. And if your CPI inflation is going to climb up in FY27.
Okay. I'm going to ask you a difficult or maybe even impossible question. When the rupee gets that attractive at like 90 rupees per dollar, and, growth, if you go by the auto sales, even for November, it looks pretty decent. Wouldn't there be a point that FIIs would find attractive, that capital flows start coming in? Would that be in December itself?
Well, I would think so. That's theoretically true, but I somewhat differ on the growth momentum bit. Look, of course, the Q3 GDP was very strong, but I would advise to take that number with a pinch of salt for the kind of estimation issues that we have usually been challenged by. In fact, our in-house growth nowcasting model showed that we have about 92% of 40 indicators we use for predicting monthly GDP growth. And in October, it likely eased by about 20 basis points than where it was in Q3. So it's tracking about 6.5%, which is very good by itself, but certainly not so hunky-dory that we don't really have to worry about growth. In fact, if you go by the commentary that's come from the government as well as the RBI, the worries about tariffs staying and the kind of impact that they can have in the quarters to come can actually be very, very significant. And all of the data that has come in totality is telling me while GST has had a positive effect on some sectors of consumption, it may not have a very strong overall impact on the GDP growth in terms of headline GDP growth. So I do think that while composition has become solid in terms of domestic demand becoming more resilient, but I do believe that the growth rates at which India is faring or could fare in the coming quarters may remain a point of concern.
Okay. But Suyash, is there any space in the market or in the market mind that there could be 2 rate cuts? Will the governor indicate, okay, I've cut and there is more space to support growth, or is that just not on the cards?
Look, Lata, there's certainly a scope for 2 rate cuts from an argument's sake. I would caution against that, given that this still is a 4% dollar yield environment. Given that, like I said before, the incremental utility of rate cuts is now rapidly diminishing. And probably it makes sense to keep some buffers in play so as to be able to hold 5.25% on the overnight rate for a longer period of time. See, what you don't want is you cut rates to the maximum you can cut to, and then the guidance turns much more uncertain, so that transmission gets compromised. And then you have to keep looking over your shoulder as to when a normalization cycle will begin. So it's much better practice, I would imagine, to just keep some buffers in play and try to hold the base level of rates for longer, supported by commentary that is reasonably constructive, flow of liquidity that is reasonable, so that transmission can happen on a broad-based manner.
Okay, very quickly, a final question, Suyash. What is the likely reaction if there is no rate cut? I mean, if the governor were to say that we want to keep the ammunition dry for a later day, probably because he's up, wants to keep one eye on the dollar rupee. It's already slipping. You don't want to give further fodder, and therefore doesn't give the cut, but says that space is available on a later day.
So it depends how strong that dovish guidance is. If the market expects that the very next policy is in play, then probably the reaction is not going to be much, especially so if OMOs come about soon enough.
Okay.
However, if the market senses that this may be close to the end of the cycle, then you could probably have a 10-odd basis point sell-off on disappointment on that day if it were to happen.
Okay. Dheeraj, what's your sense? Will the rupee be a reason why the Reserve Bank may postpone the cut rather than give it? Anyway, what's your year-end rupee target?
So for our end rupee target, we're looking at 91.5 by end of 2026. And this is assuming status quo on tariffs, and also want to importantly qualify that this is against our view of at least 4 to 5% weakness in the broad dollar index. So you can imagine the extent of depreciation, relative depreciation we're thinking of for the rupee. Now, in terms of whether the RBI would be mindful or consider rupee as a strong factor in this particular policy decision, I think that they have traditionally separated the tools to manage the rupee from the tools to manage domestic inflation and growth. And I think that distinction should continue, and it would be prudent to do so. While they do have sufficient FX reserves, they do have some runway on the forward book as well, although it is large, but they do have some runway. I think they will continue to manage the rupee and expectations around it from those tools in that toolkit, in the FX toolkit, whereas the rates at the moment should actually be exclusively reserved for domestic growth and inflation. We have seen a bit of a domestic demand recovery in the recent months, and I think a rate cut would do well to consolidate that, especially when you imagine that households had so much debt and debt servicing burden on their balance sheets at the moment. So I think rate cut for the economy and FX tools for FX. Let's keep that separate.
Okay. That's, I think, exactly how the Reserve Bank thinks. And they will be glad that the rupee market will not be terribly upset if there is rate cut. On the contrary, it may be seen as pro-growth. Out of time, but we will have to meet again to discuss both the bond and the rupee markets, post the policy as well. Thank you very much for joining us, Dheeraj and Suyash. Have to wrap up on Bazaar on that note. Chartbusters up.